Good morning, UPBOptionMillionaires.com. 3 hours before the market's going to open, we have earnings reports galore today, but I think this video is just going to focus on where the market is right now and where it's possibly headed in the short term. You can see yesterday we had that massive decline, Dow Jones Industrial Average down over 400 points, then we had that magical recovery rally, another 30 minutes of trade, and we might have popped into positive territory for the S&P 500. IWM, the small caps, made it to significantly higher prices at the end of the day. But if you look, we had a little bit of a pullback. Netflix earnings, eBay, American Express. The VIX, the VXX, was rallying after hours, oddly enough. You know, this market has been just unbelievable. It was unbelievable a couple weeks ago. We were seeing these massive moves to the upside and downside, but now it's gotten even more wild. And just this morning here, just 15 minutes ago, stock futures just completely collapsed. I was just watching, I was posting on Twitter. We've recovered a little bit of those losses, but it was in a complete free fall. So this is, we see this kind of volatility. I talked about it in the chat room. It's not a bullish scenario. That you see these kind of big swings in prices. We haven't seen this since 2008, 2009, really. This is not something that you want to be buying hand over fist. You want to be waiting until, quote unquote, the dust settles. I mean, look at the bond market. You have 30-year U.S. Treasury bond futures. Look at that spike we had at the open yesterday. TLT spiked about 128. The bid-ask was out of control. It was 30, 40 cents at times. It was all over the place. When the bond market, the biggest market in the world aside from the currency market, can't find a price, it's not a market anymore. It's broken. And they're seeing that this morning with Spanish bonds, overseas Greek bonds are back in the saddle again on a bucking horse, just going left and right, but not straight ahead. So that huge move up in bonds is telling you this market the fear is more than palpable. I know the CNN fear index is still at 0, whatever it's at, but it's just a wild market out there. Let me just bring up the VXX because after the bell yesterday, look, we closed down here. We got smacked down on the rally at the end into the end of the session, and we had this massive spike up. A lot of it had to do, I guess, with Netflix, which dropped 28% post earnings, and it's continued. And here we are. We're up over the highs of yesterday on the VXX. Netflix got absolutely mauled after the bell yesterday. This is going to be one of those astounding, amazing option trades. Just a couple people in the Option Millionaires chat room that actually got into the puts. Now, if you could have bought the 390 puts for $1, those are going to be worth, I don't know, $70 at the open. So that's $1,000 into 70 freaking grand. Pardon my French. So it's going to be a big day. But I'm going to get into earnings in my next video. I'm going to cover some earnings and some chart plays here. Let's look at the market itself. I mean, look at S&P 500 futures, which have been breaking down. We have these bounces intraday, like we got yesterday, and then a complete collapse. This started with the European market opening for trade here, and it's just been a complete sell-off as stock futures are down over 1%. Let's just pull up a chart from where we hit our all-time high, and you can see the confidence it's just being sucked out of the market, and we're continuing to drop and pull back. We're almost back to the tech wreck of 2014 lows, and even if you remember then, the QQQ was lower than the S&P 500 futures because S&P 500 stocks weren't being sold as much. It was more of a tech collapse. So what we want to watch for a possible support in this rally is for the QQQ and NASDAQ and tech stocks to really find some footing here. And I was looking, let me just pull up a long-term chart. You can see, actually, look at that, 90.2 we hit just this morning, which is below yesterday's low. Let's just pull up the NASDAQ. If we can go, it's loading. Hello, I'm loading. And these days, it takes a while. You can just listen to my very astute commentary. But look at that reversal we had. You can see the long wick. This is the S&P 500 ETF, the spiders. Just pull it up intraday. Let's pull up a 5-day chart. Look at that. We're well below. This is the Abenomics trend line up here. It's like, hello, you're going to need a supersized trampoline to get back up here. But we had a relief rally. Look how oversold we were, and then we popped off those levels. I wanted to bring that up to as a long-term perspective, that these oversold levels has worked as a great buying opportunity. Look, I mean, we're just getting clobbered here. I haven't been at these levels. Gosh, you can go all the way back into 2-year daily. This candle here actually was looks like a reversal candle. So far, it's not going to happen. S&P 5. Oh, let's look at this. I mean, this is wild. Look at S&P 500 futures here. I'm just glancing over my other screen. They've come all the way back. Look at that. Or, I joke about it in the chat room at Option Millionaires via audio that, like yesterday, we're 30 minutes into the trading session. We've got 80 million shares traded on the S&P 500 ETF, the Spiders. And I said, we've already got 3 or 4 trading sessions packed into 1.5 an hour of trade. Well, we're not even open yet. Look at this volatility that we're seeing here. We're seeing these massive spikes to the downside, the upside. That's why I've been trading it light. And ironically enough, the stocks that I'm in have been doing halfway decent. XONE was up 5-6% yesterday. DDD was up 1.5%. And I've got some calls for Google. I might get some puts now that I see what Netflix did. The bottom line is we can see some big moves in these stocks. So what's going on? There was a great piece in the Wall Street Journal this morning. Really, to me, out of all the excuses you want to see for selling stocks, it's the Wall Street Journal piece, and you'll see it if you go to my Twitter account. It's about deflation, and if you look, central banks, that's all they've been concerned about. That's why they're printing all this money, because deflation is a lot harder to treat than inflation. Inflation, you just keep raising interest rates. Yeah, and the stock market's going to take a hit, but deflation is a downward spiral in prices, and it will just cripple, and it'll just go no further than Japan to see what goes on there. So you can see U.S., let's just go back, crude oil, pull back from a longer term perspective, has been getting hammered. Now, I talk about this all the time, that back here when ISIS was taking over the world and we had the Middle East, there was the strife over there with the Palestinians and the Israelis. Oil was supposed to go to about 160, and at this point, that was going to be a tax on the consumer. But now oil has completely collapsed, and gas prices are going to drop about 20 cents in the next week or two, which is good. That's almost like giving money back to consumer to spend somewhere else. But at the same time, what this is signaling is, and the same thing with gold. Look at gold and silver. You can see it really more in silver. Gold has been pulling back. Silver has been pulling back. You're seeing a collapse of commodities. Commodities are just getting hammered. So when you see people piling into the bond market, and you see people getting out of commodities and stocks, you see the U.S. dollar, which has always been a safe haven, quote unquote, when every other central bank these days is printing money more than us here at the in the U.S. and the Federal Reserve. You got to be watching out for this deflationary aspect, and that's what the Wall Street Journal article covered this morning, and I think it's really appropriate here. But what it did not get into is how to fix this, and I think there's still more bullets left in the chambers of the ECB and the Federal Reserve to combat this. So we'll see what happens here intraday today. I just expect more of the same, which is going to be volatility. You don't want to be getting too deep in any position. We are nearing some sort of a bottom, you would think. When you have interest rates at such low levels, you got bonds being bought hand over fist. 10-year note over in Germany hit a record low. All that money that's going there is going to come out at some point. So we'll see. My only concern, I've been talking about this for a while. I put this up in a post I did yesterday when I asked when is this going to stop? Where are we there yet? Is the fact that there could be something going on behind the scenes. You look at the GTAP bankruptcy that was completely unexpected. I just want to bring up oil for a second because I have the support lines there for USO. There we go. We're nearing support there at 29. I don't know. I heard, I don't know if it was on Bloomberg, that crude oil, once it gets below 80, is not profitable. So crude oil actually hit 80 yesterday and then bounced. Well, we'll see if we get a little more weakness. But yeah, if you just want to look for a possible place where stocks are going to bottom, you have interest rates yielding, low interest rates, continuing central bank support and asset price manipulation. And I think we're at a nadir for stocks here where we might come back down, and I would say 180 here. And if you look at the NASDAQ to QQQ, I was thinking the 90 level. And here we hit it pre-market. I talked about this a couple videos ago. The 90 level. We came back, briefly broke under. Look at the support held. And that's why it's great to have the trend lines. One thing to look at is the financials, which got absolutely mauled intraday yesterday. JP Morgan Chase is now under. And you can see this trend line here. Let's pull back and I'll show you what I'm talking about. Long-term channel. This channel has acted, and we did briefly get under it back in the middle at the tech wreck of 2014. So we'll see if we can muster back into this channel, but that's pretty bearish. And Goldman Sachs, same thing. Look at this. We have broken through. Look at that. We broke through support levels here that go back to last year. So, all right, UPB, I'm going to do another market video in a little while. Go over some earnings. We got Google after the bell. It's still going to be an exciting time. Market down, up, sideways, it doesn't matter. Earnings are a great time to possibly capitalize on some big moves. And look no further than Netflix, which is going to provide some option traders, especially a few in the Option Millionaires chat room. We're going to buy dinner for all of us for the rest of the year. I don't know, 75, 80 bagger in some instances. So, all right, UPB, everyone have a great trading day. It's going to be a wild one now. Hold on to your ankles.